Hello, fellow traders. 'Tis I, the Rumpled One. And for those of you who are wondering how to get a hold of me, it's kind of been staring you in the face. Somebody says something about YouTube friends. I don't think YouTube allows us that messenger stuff anymore. So if you need to get a hold of me, this is how you do it. Fellow traders, it is Friday, March the 6th. The year is 2020. Let's talk trading. Walmal method, day 5. And it's also NFP day. Now, Walmal didn't say whether or not he trades NFP. But as you all know, these videos are for educational purposes only, and that your results may differ from mine and from Walmal's, and that trading's risky, and it can be even riskier on NFP day. Therefore, if you're looking for trading advice, financial advice, investment advice, seek it from an accredited financial professional. That way, if you take their advice and lose your money, you know you took the advice of an accredited financial professional rather than some guy with a funny name who makes YouTube videos and posts them out there, and stuff you see on Facebook or Instagram or wherever you see stuff about trading. So, of course, as I said, trading's risky, and that's why we have our risk management in place on each and every trade, so we don't lose more than we're willing to lose on that particular trade. We have our position size and stop loss adjusted according to our risk. And once again, losing, you know, you have to look at your risk and money management. You have to look at the method. You have to look at your execution and performance. Because if you don't have one of these things right, or if one of these things isn't right for you, you will lose. Repetition. Success builds confidence and competence. It's a cycle. Now, for those just tuning in, the Walmal method exploits the fact that the pound dollar on the hourly candle usually has a range of over 10 pips. Now, let's take a look at the Walmal method. Now, right now it's 9 o'clock my time. So this is the 9 o'clock candle. So this is the 8, this is the 7, this is the 6, this is the 5. So you see the 5 o'clock candle right there. That would be 8 o'clock New York time. So that's when NFP would have been at, I believe it came out at 8:30 New York time. That's usually when they make that announcement. So you can see here, there was about a 20, at least 10 pip opportunity here. But let's go back to the, let's see, the 8 o'clock candle when Walmart first starts. And you can see here that first trade may have netted just a couple of pips. The second trade, possibly just a couple of pips. If we take the above the open bias, we wouldn't have traded the south line here. Here on this candle, 1100, there was an opportunity for possibly, if you do it strict, in other words, this opened above 70, it dropped below, but at 70 it would have been red. So following the strict rules, you would have taken the trade at 80. Now Walmal might say he might want to correct that, but that's the way it's written, so that's the way I have to interpret it. But there's something else, something that I'm going to add to the method, I believe, and that is if when the candle hits the line, it's already over 10 pips, then you can see, since it's already over 10 pips, based on statistics, you've only got a 6 out of 10 possibility of it getting to 15. So, and only a 4, or just under half, 46% of it getting to 20 pips in range. So I'm thinking on the training wheels indicator that I've written, I'm going to put in range alerts that, range over 10 or hourly range over 10, caution, or maybe don't trade. I'll confer with Walmal on that. And also on the daily candle, maybe if it's already gotten over 100 pips in range, maybe then you only consider reversals. But that's just something that I see. So once again, here, this candle, that's a trick. I don't think we would have taken the short because it's above the open and the range is still under 100. So, and I don't know if you'd want to take the long here because the candle was already over 10 pips. But let's just say we don't factor that. We took it, still would have profited. Yes, hairy hindsight. Here we open below 90. We take the long trade, good for 20. Here we open below the 130. You take the long trade, good for 20 pips. So as you can see, once again, it's showing profit. Here, once again, during NFP, you grab the long at 0. You could have punched out at 10. Maybe you only took 5 as it crossed below the previous candle's midpoint or so. And that's at 03, so maybe you only took 3 pips off of that trade. Here, once again, long at the 130, good for 1, 2, possible 30 pips. And then here at the 30-30, if you were really late to the game and you jumped in at the 30, you could have nailed 10 pips or more. And then once again, you had another opportunity. But actually, let me double check. Nope, this is the 1600 candle. So Walmal would not have traded this candle. I would have because I trade the New York session. But for him, this would have been the last trade of the day, the 1500. But you can see there was profit to be made. Simple method. Now, I had a trader reach out to me. He's been losing. Looking at all my indicators, was asking me about the dashboard and some of the things. Notice that here in the Walmal method, even though I haven't put up the dashboard. Because, see, the dashboard is for or let me back up. One of the reasons I made the dashboard in the beginning was because I was trading multiple styles at the same time, and I wanted to get what's called confluence or congruence. So like if I was trading the rat zone, I'd also like it to be in the ATR zone, and also whether or not it was above a wick zone or in a wick zone. So I had all these different methods I was looking at, and I would have to flip from chart to chart because having them all in the same chart was kind of crazy. So back in 2016, I created that dashboard, but that was just for me. And so I go, well, wait a minute, what if somebody wants to use it for something else? So in 2017, I completely rewrote it and made it totally flexible. And you've seen some of the videos. But the thing is, you wouldn't give a newbie a Ferrari to drive or a Lamborghini because they can't handle it. They need to learn how to drive first. And so it's kind of the same thing in trading. I mean, yeah, I've written hundreds of indicators. It might even be 1,000 by this point. I don't know. There's lots of them. In fact, there's more indicators. I've written more MT4 indicators than MT4 can handle. If you load them up, they'll just chop you off at a certain point. It won't come up in the navigator. But the thing is that it all gets down to horizontal lines. Because some of the indicators, of course, well, like this one, it just so you can put notes on the screen. You can put your trading notes right on the screen. In fact, some people think this is the best indicator I've written. Or, some do analysis. You can see there's no price chart here. We're just analyzing data. Um, and then some indicators just simply plot out lines. And then there's the multimeters where here I can see all the candle colors for the pound dollar right here across. So we can see daily, weekly, monthly is green, and H4 and below was red, and this one's now right at the open, yellow. Now, see, so you can see at the M1, it's going back and forth. So rather than have to look at 9 different charts to see candle colors, I can take a look here and go, okay, on the higher time frames, it's green. On the lowers, it seems like it's reversing. So how should I trade? What direction? And then some indicators here just display info, the price, when the hour ends, and same here, bar time, server time, local time, when the bar ends, or, some are tools where you can switch time frames here, real easily. Even though this computer is running slow at times, but I know one of the reasons is it has to go and get that historical data. So that's why it's doing that. So like now we've got the M15 time frame as opposed to the H1. And like I said, some indicators are just displays telling you different things about price. And here is the training wheels indicator that I made. And then, some just plot lets you know where the high and low is and how far you are away from those lines in pips. And so there's lots of indicators. I mean, I've got the magnitude, or the was it magnified price indicator here. Um, Once again, it's just a display telling where price is in relation to the open, the high, and the low of the day. So if you're trying to trade, I mean, really, you got to start simple. Basically, you just start like with a method like the Walmal method, because here, price opens between horizontal lines, it hits one, you take the trade in that direction, that the direction price is moving when it hits the line. The first line, you start at the beginning of the hour. So for example, right here, this hour, this is where it started. So it went to go up, you would go long, then it starts coming down. Maybe you exit out with a profit. It comes, reverses the other way, you go short, and right now you'd be in profit. Now, some people are going to go, yeah, but what about the whipsaw? Well, let's just take a look and see. Did you get whipsawed? So we'll bring up the M1. And once again, it's taking its sweet time, loading up the history. And I did mention it was NFP day. I hope you traders traded well and profitably during NFP day, because it can be, for some, it can be overwhelming because it moves fast. I like fast moving trades. It's like playing video games to me, even though I don't play video games anymore. God, I used, but back then, I just never really liked playing them after the 70s. I just quit, and they've improved so much since then, but I just don't have any inclination to want to sit in front of a computer and play video games. So while I'm going to pause the video. Okay, I hadn't forgotten about you guys. Just I had to, between this computer slowing up. Anyway, we were talking about whipsaw. So let's just say you took the short here at this line. Okay. Now we had the open. So here's what would have happened. Actually, you wouldn't have taken a short. If you started here and then you bought, you see price went up about 8 pips. It started coming back down. You should have punched out. Then if it crossed the line, you can see it went back and then came back down. Once again, either one of those trades could have been profitable. So, fellow traders, just remember, It's not what you trade, it's how you trade it. Drain the banks.